Hello and welcome to our overview of our 2024 open enrollment to give you a general overview of all of our different benefit and enrollment options. There are other videos for each individual section as well if you really want to deep dive on each of the different ones, but I'll give you an overview. My name is Alyssa Pack and I'm the benefits coordinator for Bozeman School District, and we'll dive right in. Today, or right now, we're just going to start with how to go through open enrollment. So we utilize an online platform called Employee Access that we'll use for open enrollments. If this is a barrier, please contact me and we can schedule a meeting to overview, or there will be 2 open house events throughout open enrollment where you can come on site at Wilson and we can do it together. To log in onto Employee Access, you can find this link on the BSD7 website. You'll go under Employees, and it is the Employee Access link. To log in, your username is your full BSD7 email address, so that's first.last@bsd7.org. Your password is the same as your Microsoft password, so if you use Tyler or Canvas, it's going to be that same password logging in. If you do have any login issues or need a password reset, please contact myself or Ryan and we can help get you figured out. Once you're in, we're going to navigate to the left side of the screen here under the My Benefits tab. You will see 2 options of current benefits and enrollment. There is no select all I had last year button. So please review your current benefits to ensure you know either you want the same thing or review what you had, see if you still need it this year, and make sure that everything is in place for that. Once you're pretty sure what you want to do, you'll hit enrollment and you'll go through each line item. All right, so you have to go through each option, even though it's a bit tedious. You'll have to elect or waive through all of those. Some special notes as you're going through those: make sure you're selecting and adding your dependents to the correct plan. Triple check that you're electing the right plan, okay? This is the one time a year that you'll get to make changes other outside of some very specific options. So please make sure you're selecting the right plan for your dependents. When you get to life insurance elections, all beneficiary options, both the primary and the secondary, must total 100%, or the program will not let you submit. So make sure if you have 2 people in primary, they each have 50. If you only have 1 person in secondary, that it equals 100. And they can be the same, just make sure both the primary totals 100 and secondary totals 100. Another note is that the HSA, FSA, and the dependent care accounts all are annual deductions. So that line that you're put what you would like to see taken out for the entire year, not per month or anything, because we're going to divide that out amongst 12. So please make sure that you are ensuring that that's an annual amount. Finally, please make sure you submit your elections. If you do not review and submit, your elections will not be confirmed. You could be auto-enrolled or auto-waived or not ensure that you got the elections you'd like. So please review everything. Review everything that you see is about what you'd see, amount taken out of your paycheck, all the dependents are in the right place, because only in qualifying life events will you be able to change these. So please double check those. Next, we'll go over a quick rundown of our health insurance plan options. We could really get nitty and gritty about this, so I'm going to go quick through it. And please review our health insurance video if you want a little more deep dive. Our district health insurance plan is self-funded, meaning that all premiums that the district and employees pay contribute to a total reserve pot that we then directly use to pay the members' claims. Okay, so the district handles all the money while Blue Cross Blue Shield administers the plan. They're the ones seeing your medical claims. They're the ones processing it. They're the experts in those. We just help determine and decide all the premium amounts and how we pay for the claims to make sure we have enough for that. Quick definitions, make sure you're up to date on all of these, right? A premium is the monthly amount you'll see and take it out of each paycheck. Deductible is the amount of medical expenses you're responsible for before the district continues paying. The out-of-pocket maximum is the total amount of medical expenses you'll be responsible for in 1 year, right? That maximum risk. Co-pays is a flat rate for a service, and co-insurance is cost sharing between the district and the employee for services. So as you're reviewing plans, make sure you understand those terms so you're educated when you're deciding those. The district has 3 health insurance options. We have a basic 2,000 plan, which has the co-insurances, the co-pays. It's more of a general plan that you're used to seeing. You can review those here. And we also have 2 high deductible plans. We have a high deductible 5,000 plan and a high deductible 80/50 plan. High deductible means that you are responsible for 100% of all medical costs up to that deductible, after which the district will cover all remaining medical costs for that plan year. All right, so these deductibles will reset on September 1st, and it'll go through August 31st. So the individual premium is just for each individual on the plan, whether you're an employee only or then again, each individual on a family plan. That family deductible is for any plan over just one person. So whether it's employee spouse, employee child, or employee family, that is the max out-of-pocket deductible and out-of-pocket you will see for your entire family. And you won't pay more than that. Monthly plan prices. So you can kind of see these monthly prices are going to be correlational to the comprehensiveness of the plan. Our basic 2,000 plan is going to be our most expensive, 5,000 plan in the middle, and our 80/50 on the lower end. Just to note, our 80/50 employee only plan does have a negative quotation there. The district will contribute that amount to a health savings account if you do have it and elect that plan. So pause here if you would like to review that more. So what plan is for you, right? There's kind of pros and risks and benefits of each of these. So kind of the basics are, with the basic 2,000 plan, those copays and co-insurances will allow your out-of-pocket expenses to grow much slower. For example, going to urgent care, you're going to see that $75 copay. Wow, versus with our high deductible plans, right, you're going to see a multi-$100 bill because you'll be paying that full cost. The bills you'll see from providers will never be as much as these other high deductibles. So your savings each year, you'll have to be a little bit less concerned about. The risk of it is it's an expensive monthly premium, right? You're going to see that money come out of your paycheck. It will never, ever really make it to your bank account, but you'll see less coming from your paycheck because of it. With our 2 high deductible plans, 2 huge benefits. It's being eligible for a health savings account. But with that $5,000 plan, you know, that max risk, that out-of-pocket risk is going to be less than the 80/50, and your premium is less than the 2,000. So just a really good middle. The risk is that you do have to be ready to be responsible for 100% of those medical costs up to the deductible, whether 5,000 individual or 10,000 family, and making sure you have the savings, whether it's in a health savings account or on your own, to be able to afford that each year in the event that you need it. The 80/50, the benefits of it, it's the lowest monthly premium. You know, you're going to get more money into your bank account each month, but when you go to seek medical care, be ready to have that really high deductible. We kind of call this our catastrophic plan. It's really going to help you in catastrophic big needs, but when you need it, it's there. Because once that deductible is hit, you're not responsible for anything. The district will cover all expenses. Bottom line, do you want to see your medical costs coming out of your paycheck? Or do you want to see it on the back end coming from medical bills from your provider? And I think this is going to be really up to you, understanding how much will you utilize it, what are the risks for you and your family, your health needs, your prescriptive needs. There is a health cost analysis tool and calculator for you to better understand these as well. So investigate that if you do feel still a little overwhelmed of which plan to choose. Okay, next we'll do a quick rundown on our dental and vision plans. So we utilize a reimbursement plan for both our dental and vision, which is a little bit different than what you're used to. You're not going to receive a insurance card for dental or vision. You're not going to submit to insurance. So just listen up if this is new to you. How to work is you're going to pay for all dental and vision expenses out of pocket. So directly to the provider after the appointment, after the purchase, you'll pay them. You'll then submit a full statement with all of the following items, ensuring that the patient's name, date of service, what was serviced and purchased, as well as proof of payment is on the item of the receipt. So here on the right, you can either see an example. I see in yellow the patient's name. In green, I see the date of service. There's what was serviced in purple, and as well as proof of payment with that credit card line item in blue. This would be a valid statement. If it's a dental or a vision statement is missing any of these, I'm not able to reimburse. So make sure you're double checking when you do submit that they have all of them. You can send those claims directly to me in the mail at the Wilson or email them at claims@bsd7.org. For our dental reimbursement, here are those monthly costs for each plan. You are reimbursed 100% for the first $200 in claims you submit. After that, you're reimbursed at 50% up to a total of $800 of reimbursement. This is per person, per plan year, and all dental expenses are eligible. So if you have a preventative dental appointment, you have other dental needs, you have orthodontia care, they're all eligible and can qualify for these reimbursements. For our vision, you're reimbursed at 75% up to $250 of reimbursement per claim you submit, again, per plan year, per person on the plan. You cannot purchase this vision reimbursement separate. It's actually a bundle if you get if you elect a benefit or a medical plan, and they cannot be separated. So enrolling in medical, you'll automatically enroll in vision to utilize that. All right, now we'll go over our ancillary coverage options. So these are extra insurance coverage options, right? Sometimes health insurance alone isn't enough. Sometimes we want a little more than district paid life insurance. So I'll just give you a rundown of these options for you to determine what might be best for your family. First is we have voluntary supplemental life insurance as well as accident and dismemberment insurance. These are two different types of life insurance. Our supplemental life insurance is coverage to help replace income and cover expenses in case of a passing. You can cover yourself, spouse, and your children. And this is for any cause of death, sickness, a terrible accident, age, any of those that supplemental life insurance can help. You can elect separately or in addition, accident and dismemberment insurance. And this is coverage only for the death being caused by an accident, not illness or age. You can elect a guaranteed issue amount of $200,000 on your first enrollment as a new employee. After that, you can increment it up in 10,000 increments up to a maximum of 500,000. If you want to exceed that, you're going to need an evidence of insurability form where you'll fill out some medical questions and they will determine if you are eligible. So if you do go above those increments, make sure you're keeping track of your current benefits to understand that, and we'll make sure you get that form completed. Different insurance we offer is short-term disability insurance. This is income insurance, basically. So it's just help supplement your income if you're out of work for more than 2 weeks due to medical reasons. This is hugely helpful for individuals who have small sick leave and personal banks with the district. If you haven't been here that long and you don't have that much stored up, this can help supplement your income while you're at a loss of pay. Some main examples to utilize this is maternity, long-term treatment, a long injury recovery, or something like that. It's going to cover 60% of your full-time weekly earnings. Maximum benefit is $1,500, and the maximum duration for this pay is 12 weeks. But know that you're not guaranteed 12 weeks. The amount of weeks you receive benefit is how long you're medically unable to work, determined by your doctor. So for example, in maternity reasons, vaginal birth is going to be 6 weeks, is medically unable to work, while a C-section is 8 weeks. And they'll determine that and give you pay for that time. One thing to keep in your head is that short-term disability has pre-existing condition clauses. So for the first 6 months of coverage, so if you elect this September for the first time, for the first 6 months, if you were diagnosed with something 3 months prior to enrolling, you are not eligible for benefits. So you sought care for your pregnancy, for your illness, for your injury before enrolling for the first time, you won't be eligible, unfortunately. However, if you are diagnosed or realize you're pregnant after enrolling, then you are eligible for those. So just be aware when you elect to understand those clauses. Another additional option that we have access to is called critical illness. This is what they call as kind of like sleep medicine, right? It's just a bonus. It's a lump sum cash benefit with the diagnosis. So heart attack, stroke, or cancer are examples. And that cash benefit can be used to pay your deductible out of expenses, supplement your daily cost of living. Maybe you have more travel because of this, more medical needs. Just to help supplement some of those. This also has some pre-existing condition clauses. So if you have been diagnosed with these prior to enrolling, you're not eligible. But again, all further, you are. You're able to elect in $5,000 increments up to $20,000 for you and your spouse. And here are the amounts for each of those. You know, if you have an organ transplant, you'll get 100% of it. If you have a bone marrow transplant, you'd get 50% of that sum. And so a great sort of extra income if something terrible were to happen. The last supplemental option we have is voluntary accident insurance. This is also a lump sum cash insurance for injuries after an accident. If you break your leg and you're unable to work and unable to drive and have all these upcoming bills, it'll kind of help cover some of those. Here's a little bit of accident benefit example. It kind of depends on the care you seek. So if you need an ambulance, you could receive a cash benefit for that, which is separate than hospital admission, which is separate than maybe some urgent care costs. That can help cover those. Last thing we're going to talk about on this video is our tax advantage account options. So with the district, you have 3 different tax advantage accounts you can take advantage of. A lot of advantaging. We have a health savings account, a flexible spending account, as well as a dependent care account. And a tax advantage account means that money is taken out of your paycheck, put into a special bank account, and that income that is put into that account is not taxed. So it can save you a lot of money over time. Starting with our health savings account, only members on our high deductible health plans are able to participate. So if you're on our basic health plan or a different health plan that's not a high deductible plan, you are not eligible. You can use these funds for any medical related expenses. So whether it's out-of-pocket cost towards your deductible, you need some medicine, things like that. The funds that you deposit into it will roll over year to year. So if you put in $1,000 this year, but you only use $500, that extra $500 will roll over to your account next year, and so on. So you can accumulate those. You can also change your election at any point throughout the year. So contact me if you do want to do that. You, as the employee, are 100% responsible for keeping track of your annual deductions and ensuring that you do not go over the IRS limits here on the right. Individual is the maximum amount for individuals filing single or married filing separately. The employee plus 1 or more is anyone filing married or claiming any dependents on their tax documents. Those are your maximums. And the age 55 catch-up is in addition to these maximum contribution amounts. If you are over the age of 55, you're able to contribute a little bit more. Our flexible spending account is a medical account. If you're not utilizing an HSA, you are eligible to use, again, an account for any medical expenses. The election you make is made for the whole plan year. You're not able to change it, so definitely keep in mind for that. And when you do elect a certain amount, on September 1st, you gain access to your full annual contribution. So say for the whole year, you would like to contribute $1,000. Maybe after the first month, right, you've only contributed 96 or whatever it is. You're actually able to access that full $1,000 right away for any upcoming medical costs that might occur before you've contributed the full amount. However, with that clause, if you have not used all funds by the whole year, you do not get to keep them. It does not roll over, you'll lose them. So just making sure you utilize all those funds by the end of the year. We also have access to utilize a dependent care account. You can use these funds for child, disabled spouse, or aging parent care while you're at work. This is an election that you make for the entire year and you're not able to change it. And you do gain access to funds as you contribute. So not quite like the flexible spending account. If you put in $500 each month, you'll get it as you contribute. This is a use it or lose it account as well. So ensuring you use all of your funds by the end of the year to make sure you utilize what you've contributed. Thank you so much for listening to that. Please reach out if you have any questions. This is so much information, but just taking the time to educate yourself on these options so that you can make the best plan for you and your family is going to set yourself up for success. And make sure that you go through open enrollment, and I will chat with you later.